Hashtag Trending would like to thank Meter for their support in bringing you this podcast. Meter delivers a complete networking stack, wired, wireless, and cellular in one integrated solution that's built for performance and scale. You can find them at meter.com/HTT. Peter Thiel dumps Nvidia as AI investment patterns raise questions. A Vancouver, Washington area startup tackles AI's biggest limitation, power. TikTok tests a less AI button as people push back against AI slop. And a $10,000 Nvidia GPU snaps under its own weight. Welcome to Hashtag Trending. I'm your host, Jim Love. Let's get into it. Peter Thiel has apparently sold his entire stake in Nvidia, adding fuel to the growing debate about whether the AI market is becoming too inflated for its own good. Thiel's fund unloaded roughly 537,000 Nvidia shares in the third quarter, a position worth about $100 million US at the time. It's a notable move because Thiel isn't just another investor. He co-founded PayPal and Palantir and was the first outside investor in Facebook. He's known for contrarian bets that sometimes show he's willing to step away before the crowd. When he moves, investors pay attention. Contrast with SoftBank, which recently sold its own Nvidia stake to raise money for its investment of over $30 billion into OpenAI. Thiel, by comparison, looks more cautious. But he's not alone. Recently, some analysts have been warning about circular flows of AI money, where companies fund one another in ways that can look like demand, but may simply be recycling capital. We're seeing examples of that. Nvidia has committed up to $100 billion to OpenAI, deploying at least 10 gigawatts of Nvidia systems, meaning Nvidia is both investor and supplier. And Nvidia and Microsoft are jointly investing up to $15 billion in Anthropic, $10 billion from Nvidia and $5 billion from Microsoft, while Anthropic has committed to buying $30 billion worth of compute from Microsoft's Azure cloud, which uses Nvidia. These are enormous numbers, and they raise fair questions about how much of the AI boom reflects genuine demand versus capital cycling through the same few players. And it's not limited to Nvidia. The Financial Times recently reported that Oracle has already lost more than $300 billion in its market value after announcing its own massive multi-year OpenAI partnership. The drop reflects investor unease with Oracle's debt-funded data center expansion, with CapEx projected to reach $80 billion annually by 2029 and net debt expected to nearly double by 2030. Oracle has effectively become a public market proxy for OpenAI, and the market reaction hasn't been kind. Amazon and Broadcom have also traded lower following OpenAI-related announcements, while Nvidia's share price has been largely flat since its September OpenAI deal. But a few months ago, even a hint of an OpenAI partnership was enough to boost the stock. Now, that halo effect appears to be fading. Thiel's sale doesn't predict Nvidia's decline, but it does underline a real possibility. When investments, partnerships, and supply chains all become tightly circular, it's harder to tell where true demand ends and financial engineering begins. And that's where bubbles often start to show their seams. The biggest barrier to the next wave of AI growth may not be models or data centers. It could be the electricity required to run them. A new player is stepping into that gap. As demand for AI training servers grows, power consumption is becoming a real choke point for data center builders. If you can't feed the machines enough energy or manage the waste heat, you can't scale as fast as you might assume. Enter Lattice, a startup founded in 2023, originally near Vancouver, Washington, that says its power delivery chiplet can reduce energy requirements for next-gen chips by more than half. The company just raised $25 million in a Series A funding and has attracted backing from Pat Gelsinger, the former CEO of Intel Corporation, now general partner at Playground Global. His involvement lends some serious credibility. The concept is simple but effective. By bringing power delivery closer to the processor inside the package, you minimize losses, reduce cooling needs, and improve performance per watt. Lattice says the technology slots into existing chip maker workflows rather than forcing a complete redesign. The takeaway isn't that AI compute is solved. It's that the path to scaling isn't about just bigger models or more servers. If power becomes the limiting factor, then companies that can crack the "how do I feed and cool this" problem could shape the next era of AI infrastructure. AI-generated content is flooding social media, what many now call AI slop. And TikTok, of all places, is testing a way to see less of it. And the move raises a big question. If TikTok is sick of content, are we all hitting the limits of our tolerance? TikTok has confirmed it's experimenting with a control that lets people reduce the amount of AI-generated content in their For You feed. It works much like the existing See Less Politics option, but aimed at synthetic videos, images, and clips. And what makes this notable is the platform itself, TikTok, helped popularize rapid-fire, remixable content and has been one of the most AI-friendly ecosystems on the internet. And the shift comes at a moment when AI video is exploding. OpenAI's Sora reached 1 million downloads in under 5 days, faster than the earlier rise of ChatGPT, and remarkable given that Sora was invite-only and restricted to iOS in North America. The result is that timelines across platforms are filled with cinematic 10 to 15-second clips, along with AI music, AI scripts, AI narration, and auto-generated memes. Now, there's no question that a segment of the population is uncomfortable with AI-generated content. You can see it in creator forums, comment threads, just look at our YouTube comments, and in the rise of labels like AI slop. But what makes TikTok interesting is it's not the platform where you'd expect this sentiment to show up first. And it's unclear whether TikTok is simply catering to a small but vocal group or sensing the early stages of a broader trend. That's something we'll only find out by watching how this plays out. Now, whether this becomes a wider pattern or stays a TikTok-specific anomaly, the fact that one of the most AI-saturated platforms is offering a less AI option makes it worth watching. Could be a quiet signal, a digital canary in the coal mine for how audiences want synthetic content balanced, at least, in their feeds. One of Nvidia's newest workstation GPUs, priced at around $10,000, reportedly broke in transit after the card's own weight caused the PCIe connector to shear off. Tom's Hardware reports on this that the RTX Pro 6000 Blackwell, a high-end professional GPU intended for workstations, arrived damaged after shipping. The card is unusually large and heavy, and in this case, the weight of the cooler assembly appears to have put enough stress on the PCIe bracket that it snapped, severing the connector from the PCB. The owner attempted a repair, but despite the card's modular design, which should allow you to repair it, there are no replacement parts available for this type of failure. That leaves the unit, which could be the price of a small used car, as a total write-off. The RTX Pro 6000 Blackwell is part of Nvidia's latest generation of professional GPUs designed for AI development, scientific workloads, and advanced graphics. But as this incident shows, even top-tier hardware isn't immune to physical stress or the realities of shipping. And it's just one broken card. But it does leave us hoping it's not a metaphor that the AI industry has grown so big so fast that it could collapse under its own weight. And that's our show. Once again, we'd like to thank Meter for their support in bringing you this podcast. Meter delivers full-stack networking infrastructure, wired, wireless, and cellular to leading enterprises. Working with their partners, Meter designs, deploys, and manages everything required to get performant, reliable, and secure connectivity in a space. They design the hardware, the firmware, build the software, manage deployments, and even run the support. It's a single integrated solution that scales from branch offices, warehouses, and large campuses all the way to data centers. You can book a demo at meter.com/HTT. That's meter.com/HTT. I'm your host, Jim Love. Have a thrilling Thursday.